Well, hello everybody, and welcome to Real Wealth Network's weekly webinar. How you doing? My name is Ben Smith. I'm the Director of Investor Relations and also an investment counselor in my spare time for Real Wealth Network. So glad you could join us. So today we're going to be talking about Detroit, Michigan, Motor City, and it's going to be a good one because there's a lot of happy, fun things coming out of there. And so here we go. Let's go ahead and advance to slide number 2. And the part that I hate about all this, there's me and my pasty face. I've been investing in real estate for about 27 years, rehabbed a bunch of properties in California, Arizona, and at this point, Florida as well, although I didn't really do those myself. But the Arizona, California ones I did myself. Currently own about 12 properties and counting. All right, and here is our friendly disclaimer, which I always like to go over. Bottom line, do your due diligence, trust us but verify. Real estate is got some risks. The strategies mentioned in the presentation may not be appropriate for everybody. Other options not mentioned may be more suitable for your specific circumstances. Consult your CPA, tax advisor, and/or attorney to discuss your specific situation. Past performance never guarantee future results. Real estate purchases are subject to investment risks, including the possible loss of amounts invested. While we do everything we can do to maintain accurate and current information and go out of our way to check stuff out, things change, life gets in the way, and it's always a good idea for you guys to check out what we say, verify it, poke around, do internet searches, get on planes, fly to the area, wear dark glasses, do whatever you can do to back up what we say. Always a good idea whenever you can. Alrighty, so before I turn it over, I do want to just throw in, I hope this is okay, but I'm going to throw in a little plug for our event coming up very, very soon. We're doing our Eastern Showcase event on Saturday, February 9th. And normally on the West Coast, we have like events every month, right? We have one in San Francisco on Saturday and then one in LA on Sunday, and they're all fine and good. And normally we have one or two, sometimes three different affiliates representing a respective market come out and talk about their market. But in this particular time, we are not going to do that because once a year, we like to have everybody show up. So that's happening early February. We've got, I think it's 13 markets, all doing kind of compressed 20 to 25 minute presentations. So we've got literally everybody. We've got Houston, Dallas, Jacksonville, Tampa, Chicago, Indianapolis, Cleveland, Cincinnati. I'm going by memory, so apologies in advance to about a handful of people that I forgot. But anyway, so that's happening. So if you're interested in doing that, I would highly recommend going on and signing up. It's free to attend the event, as always. Of course, you have to get yourself there. It's happening in St. Petersburg, Florida. Our Tampa team is our hosts for this. It's happening at a hotel. So if you could do that, that would be great. Sign up, realwealthnetwork.com, go to the live events, and it's filling up fairly rapidly, but you don't have to race to the computer, but it's gonna tap out at some point. And then we're doing a tour of Tampa after that on Sunday. So you can also sign up for the tour. You don't have to go to the event to go to the tour. You don't have to do both. You can do one, you can do neither, but they're two separate events. But while we've got probably about 150 Real Wealth Network members hanging out in Tampa, listening to everybody, we thought, hey, what a perfect time to do a tour. So we're gonna have a bus. It's gonna be capped off at 47 people because the bus holds like 52, and we're gonna be driving around looking at property. So anyway, hope you can join us. If you're interested, sign up. Alrighty, I'm going to turn it over to our affiliate from Detroit, and I will say that we've been working with these guys for about 3 years now? Does that seem about right?
That's right. Right around 3 years so far, and
Good
around
deal.
hundreds of transactions. I think we're close to 300 transactions.
Wow. I kind of quote the upper 100s, but now I'll revise that to the upper 200s. Beautiful. Well, I will just turn this over to you. We've had great success with you so far. Looking forward to that continuing. Have no doubt that it will. But just take it away. Tell us about Detroit.
You got it, Ben. Well, I am your Detroit affiliate, and I greatly appreciate everyone being on this call. We're excited for the new year, and we're excited for the real estate market. Detroit is really, coming back to be a jewel. And when people come here, their jaws just drop. I mean, it is unbelievable. So a little bit about us as the affiliate. Our company was formed in the real estate industry into the, flipping turnkey homes and rental homes in 2003. And we started to focus on turnkey rentals. And the reason why we did that was because we love cash flow. That's what we love. We love the cash flow coming in every month. We love the safety of cash flow. We love the fact that it doesn't matter whether the market's up or down. We got cash flow coming in. So we really love turnkey properties. We've done over $100 million in business. So we are experts in the market. We're experts at creating returns, and we're experts at making clients money and building long-term relationships. Here is a little video that I want to kick us off with that will really give you a visual on Detroit, where it was, where we're at, and where we're going. In this video, I always like, for the last 6 months, I've been showing this video because it really puts words into visual perspective of how unbelievable this market is. I'm from here and I live here, but it is amazing that that's the kind of feedback that we get when clients come here. So I'd like to start the video, and then we'll take it from there.
The Motor City has officially gone bust.
Back to Detroit now, the biggest U.S. municipal bankruptcy in history. As you may know, the Detroit public school system is a shambles. Owing more than $18 billion in debt, Motor City officially filed for bankruptcy just moments ago.
It was a city in ruins. Detroit, once booming with a population of 1.8 million people, shrunk to a town of just 700,000. An auto industry that once sustained the city, needing a government bailout of $25 billion. Neighborhoods deserted and a downtown turned into a modern-day ghost town. That was the old Detroit, and this is the new. Today, business is on the rebound. And prominent Detroit-based investors like Dan Gilbert, CEO of Quicken Loans, which has more than 100 companies under its umbrella, are stepping up.
When I think of Detroit, I think of GM. I don't think of this Silicon Valley like office space that you have.
Yeah, there really is a technology center here that's growing every day. About 110 new technology companies probably in the last 3 years alone. It's nice to know that at least there's some intrigue. People like you are showing up.
That intrigue has business flocking to a once deserted downtown Detroit. 4 years ago, when Gilbert moved his company's headquarters to the abandoned city, he brought 1,300 employees into buildings that were only 20% full. Fast forward to today, downtown office buildings are 95% occupied, and construction in the now chic downtown can't keep up with demand. High-rises are transforming left and right, as was once a crime-ridden ghost town is turning into a modern-day metropolitan gem. Billions of dollars have been invested, and Wall Street is paying attention to the revival, including some of its biggest titans.
And you've had a lot of interest from people like Warren Buffett.
Yeah, they're coming in sort of daily. Actually, Warren Buffett's going to be here next week again. We just took Madonna through the other day, and we're taking a lot of people through, well-known people and not well-known people. Until you're here and can feel it and see it, you're not going to understand how exciting the opportunity is.
Yeah, well, that was a little bit of a taste of the media and Dan Gilbert himself telling you what's going on with Detroit, but still nothing beats the visual and actually coming here. So let's talk about Detroit. Let's get into the some of the nitty gritty and talk about some of the facts. And when we talk about Detroit, we're talking about Southeast Michigan. We're talking about Michigan, but Detroit, when you say Michigan, if you say Detroit, you mean Michigan. So we're just going to say Detroit. So Michigan is the 10th most populous state in the country. So there is a lot of people here. So we have a lot of people that live in Michigan. There's over 10 million people that are here. There's 700,000 plus and growing in Detroit. So as you heard, one day Detroit back in the day used to have about 1.5 million people that live there. Are we going to get there next year, this year, next year? No. It's a process. It's going on. It's happening now. There's projections for the future for Detroit to keep on growing. And it's incredible because if you look at Detroit, it's a very, very, very large city. You can fit San Francisco, Boston, and Manhattan within the city limits. And a lot of people sometimes they tell me, what's so significant about that? Why? So what? It's so big. And what I tell them is, it's so big, it attracts companies. There's land, there's tax benefits that they can give. There's more development that's happening. It's one of the biggest cities in the country, and all around the world. If you go to a lot of different places around the world and even around the country, you talk about the major cities. Everyone knows New York. Everyone knows Los Angeles. Everyone knows Chicago. Everyone knows Atlanta. Everyone knows Dallas. But Detroit is in that conversation too. Detroit is a well-known city, and it's known for the Motor City. This is where the automotive capital of the world is, and it's in Detroit. It's in Michigan, and you have all the major automotive company, the three major automotive companies here doing well, strong, back on their feet. So there's some reasons why Michigan is so appealing and why we love Michigan. Corporate tax is very low. It's one of the lowest in the nation. And personal income tax is low here too. You always hear some of these famous athletes, they move to different cities and states around the country because they have a lower income tax. And Florida is one of the states that has lower income tax, but Michigan is too. So there's some benefits there, being in Michigan. Also, Michigan is one of the most affordable places to live in the country, and that's why it's so beneficial. There's a lot of great reasons, not only the taxes, but also the affordability to live there. So it's a very business-friendly state. You have a lot of incentives for companies to come in here to move in. They give a lot of tax. There's a lot of grants from the federal government. And there's a lot of programs that are driving businesses to come here. And with Gretchen being the new governor, she has a lot of plans to really drive a lot of businesses into the state and really even create more jobs. Our unemployment rate is the best it's been in the last decades I could remember. It's under 5%, so it's going really good here. We were talking about it the other day in the office, and we were just chatting amongst our team in the office. We have about 20-some people here, and we were saying, do we know people that are looking for work that can't find jobs? And the consensus was no, there's jobs here. The only people that can't find jobs are the ones that don't want to work. So that was a really good thing, that there is jobs here. You even have a new plant that just opened up, the Fiat Chrysler plant. They added an assembly plant. So sometimes you hear, GM lost some jobs, but then you don't hear the other side of things, that Fiat Chrysler just opened the plant. So we are healthy, doing great, and things are going real well. That's why when people come around here and they see that, they ask that question, I want to address, hey, what happens with some of the layoffs of that happened with GM? Well, there's things that are happening that are incredible, which is Google moving downtown, Microsoft moving downtown. We're really the finance hub of the country. If you look at it, we got the largest mortgage origination companies in the country here, from not only Quicken Loans, but Caliber, many major financial institutions that are here. And you heard Dan Gilbert himself, it really is also a tech hub. So here's some of the major employers. We want to have their logos very clear on here. And, we've added some on here because, when we're going through building these presentations, sometimes we think automotive first, but not a lot of people remember Meridian. They employ so many people. Caliber Home Loans, huge. Flagstar Bank, United Wholesale Mortgage, Chemical Bank just moved their headquarters downtown. Ford, GM, and Chrysler. Their GM is actually in downtown, Ford's in Dearborn, Chrysler's in Troy, which is all right in the Southeast Michigan area. But there's a lot of major employers. We're not dependent on just the automotive. We also, like Dan Gilbert said, we have over 110 new tech companies come into Michigan in the last 3 years. It's actually up now from 110. So it's going great. Detroit's growing economy. So I touched on some of that with, what's going on and whatnot. But, when you come and see it for yourself, and you see the cranes and you see the development and you see the hotels going up, it's amazing. Like, you just had, a new stadium built, which is the Little Caesars Arena, which the Red Wings and the Detroit Pistons play in. And they have an office building all the way around the complex because there's office space needed. So, I mean, it is great to see that kind of stuff going on. And, Olympia Entertainment just proposed $200 million in a new office retail development in District Detroit. So that's what I was talking about, that they're adding. They not only have a facility there now, but they're adding because of the demand. People want to move down there now. Now it's like a mini Chicago. It really is. I mean, Dan Gilbert bought the Hudson, the old Hudson building, and he's building a $1 billion skyscraper. It's absolutely amazing. And that's why we really encourage and we love when people come out to our office, do tours. We do a bus tour twice a year, a really large one, but we also do it on a weekly basis on Wednesdays and Thursdays. And we generally have 2 or 3 people, come on the same day, and we go out. And you should see the consensus in the videos that we can show you guys when you want to learn more. But developers are breaking ground on single-family homes in Detroit. So there's new projects that are going out that the city's creating because of the housing demand. So there's a housing demand, which means people are moving back in, which means there's jobs, which means the prices are going up. So it's amazing. Like I mentioned to you guys earlier, I said Detroit is a major medical hub where there's a lot of hospitals. Well, Henry Ford is actually building a new facility. It's $38 million right downtown next to their current hospital. And it's actually the Carmanos Cancer Center. And that's just one project of so many that are happening. Tiger Stadium, the old Tiger Stadium, got torn down, and they're building new apartments there. And, if there wasn't demands, people aren't going and spending $30 and $40 and $50 million on projects for housing. Next slide, please. So here's a snapshot of the job growth. So you see along, since August 2017 to August 2018, that's the data that we got for now. And then, we'll have new data as it comes along. But you see the job growth. You see what's happening. You see that there's recovery and there's 15,000+ new jobs in the Detroit metropolitan area. We are projecting continual growth, and there's going to be more and more new jobs that are going to be going on there. So the Metro Detroit area employs over 2 million people, and that's a lot of jobs. So Michigan affordability. Michigan was ranked, I don't know if it was in the beginning of 2018, it was ranked as the best place to live on a $60,000 and under income. So it's very affordable. People love the fact that you get a lot of bang for your buck here. And that's very rare around the country. I mean, you know how expensive it is in California. I mean, the rate, the return on investments are just not there, but it is here in Michigan. And that's why one of the things that we love about the market is affordability and the ability to really grow your wealth through real estate. Also there's a low cost of living. I mean, it's affordable from many senses, and not only the real estate, but there's affordable cost of living. So here's the median home values of Detroit versus the United States. So if you look at the side and you really study it, you look at RWN neighborhoods, United States, and metro area. So the RWN neighborhoods, if you look at that, look how they've grown from 2012 to 2018. You're on an upward incline, just like the rest of the country. But there's one differentiator that's a big differentiator. Look at the cost of our houses versus the other houses. That's incredible. That really is incredible. I mean, for getting the most bang for your buck, Detroit is the #1 place in the country. I don't know any other place that really has this kind of bang for your buck. Here's the average rents. So as you see, our average rents are right around 900 plus, but then that's for what? For a $65,000 property. But then you have, you go to another place that you buy a home for $150,000 and you have, $1,100 or $1,200 rent. So we are way better than the 1% rule. We are way better. And, I think that's what's most important in the, investment world is to make sure that your money's growing, your wealth is growing. If you have a finance property, that you're building wealth there by also having appreciation. I never promise appreciation. We never predict appreciation. We could never do that. We could count on cash flow, but the appreciation from the statistics is happening. So that makes me happy. And I always make a little joke about it. And, it's true. Think about a cow. What are you expecting from a cow? You're expecting the milk from the cow. If the cow gets pregnant and has a baby, it's a calf, that's a plus. So we've been experiencing the cows having babies in Michigan, and hopefully we'll continue to see appreciation. So the population growth, the slide speaks for itself. It's awesome. We are seeing, population growth on a continual basis. That's from the jobs that are coming in. That's from the new proposals from the cities on, different things that they're doing to bring in companies. That's from companies coming here. That's from Tesla being here, working with the big three. That's from some of these tech companies coming in and growing. That's from the incentives that Dan Gilbert and the city is providing. That's from Microsoft moving downtown. That's from Google moving downtown. Those are a lot of great things that we talk about that are going on, and it turns out great. Also, like I mentioned, that's from the medical hub we have here. We have hundreds of thousands of medical jobs in the state, in the area. We have the automotive, we have the tech, we have over 3,500 defense and government agency companies that are in Detroit and the surrounding areas. Detroit is actually home to 100 of the Fortune 500 companies. So these all lead to growth and population. So Detroit's improving infrastructure and services. There's 40,000 homes that are being torn down. There was 80,000 before. Now we're at half. We've been putting new LED and lighting systems in the neighborhoods, hence more people moving in, values going up, less crime, a lot of great things going on. The M1 rail, when you guys come here for a visit, we will show you it for yourself. This is creating more, less need for cars downtown. A lot of great things going on with the M1 rail. Hopefully one day it's going to reach out to the suburbs. It's, public transportation is growing, which means we're a growing city, a growing economy. The bus systems, spend a lot of money on the bus systems. They're spending a lot of money on the police and fire services. All these things are signs of great things going on. This is very impressive here. So we have a new bridge that's being built from Detroit to Canada. Right now, there's currently a bridge by the name of the Ambassador Bridge, and there's also a tunnel. The new bridge that's being built is called the Gordie Howe International Bridge. And why is that happening? Because there's so much trade back and forth from Canada, and Detroit is the largest POE, point of entry, into Canada. So that's a huge thing. So you have the largest point of entry in Detroit into Canada. So there's a lot of trade that goes on there. Okay, our homes. Ben, this is what you're looking for. This is where we're at. So our houses. So our house prices range from $50,000 to $150,000. And, we can show you different examples of houses. We won't get to too many on this webinar, but we will, just touch on some things real quick here. 50,000 to 150, average rents from 800 to 1,600. So you see that we are always above the 1% rule. Obviously there's situations when, numbers are better, but when you get into higher prices, sometimes you're getting close to the 1% rule, or that's things that we can show you individually. Our houses range from 900 to 12 to 1,300 square feet. We buy 3-bedroom plus houses with a basement and a 1 to 2 car garage. So we look at that as a package. We love when houses have, a basement and a garage. It's just the most comfortable situation for people to stay in the house for longevity. We want tenants that are going to be there for 3+ years, be comfortable, and that's what we look for. But we are always going to have one of the two, a basement or a garage, but we prefer both, but we'll never not have a basement or a garage in the house. So here's a neighborhood overview. We shoot for neighborhoods that are safe, low crime. They have high rental demand, high home ownership demand, middle class neighborhoods. And who are our tenants? People always say, "Who are your tenants?" They are teachers, nurses, people that work for the big three, people that work for the government, people that work for the healthcare system. So we have really a diverse clientele of tenants, and we really do a great job at screening them. You could have a nurse who is has a bad record. Well, we're not going to take them to be our tenant. So we really do a good job screening our tenants. Like I mentioned, we acquire properties in middle class neighborhoods, high rental demand, and also home ownership demand. Wayne County, Macomb, and Oakland are the main areas that we work in and that we buy homes in. So here's an example of a $70,000 house. As you see it, it's a fairly large house. I would say something like this is sometimes 1,400 square feet. Someone can buy it for $70,000. The rent there on something like this is $850 to $900. We're usually conservative, but I would say something like that would rent for about $900, but we have $850 on here, which is fine. And with all your numbers, I think, Ben, you guys miss out on the closing and rehab costs, but that's fine. We don't need to put that there. As you see, your annual cash flow on a $14,000 down payment is very strong. You're nearly making, over 15% on your money there. So,
and I'm just going to point out something that I noticed right before we went live. It says closing costs not applicable. That's actually not true, and we did figure out some closing costs. So it says down payments $14,000, initial cash invested $15,400. So what that means is that you were calculating closing costs at 2% of $70,000 or $1,400. So before anybody texts me going, "Hey, there's no closing costs," they are factored in. It just, for some reason, it says NA, and we're going to fix that later.
Yeah, I mean, if you look at it, the bottom line is if you divide $3,872 into $15,400, you can figure out your returns, which are 15,400 or 3,872 divided by 15,400. Your returns are roughly, doing it right now, you're the 20+% range when you're financing. So I'll just put it that way. These are actual numbers, but I'm just doing the quick math in my head. Now, if you do cash on cash, if you bought it cash, you're making 10% plus. So that's a great thing. 3 bedrooms, 1.5 bathroom, and almost 1,200 square feet, 1144. Here's another property. It's 3 bedrooms, 2.5 bathrooms. So these kind of homes have tenants lining up for them when you have a property like that. $77,500. If you're putting down $17,050 on this, and your annual cash flow is $4,450, you have a return on something like this of roughly 25%. So this is pretty amazing in the sense of you can get those kind of returns, when you finance. Now, if you do cash on cash, you're roughly, I think, something like this, doing the math in my head, is roughly 12% maybe. Let me see, it's 87,88559 divided by 77.5. You're roughly 11%. So first one was 10%. This is 10% if you paid all cash. Here's another one, 3-bedroom, 2-bathroom. Price is 105. Rental rate is higher. This is actually in Redford, Michigan. So it says Detroit up there, but it's not Detroit. 1,200 square feet. On something like this, your returns are 3168 divided by 21,000. You're looking at a return of roughly 15% on your money if you finance. If you don't finance, you have $8,700, $8,736 that you're cash flowing, and you put 105 down. You're roughly looking at almost an 8%, 9% return right around there. This is a Class B neighborhood, really good homes, good areas, rental demand, tenants lining up for something like this where we pick and choose the best tenant possible. I would like to touch base with something before we get into the questions. So
Sure.
One of the most important things in real estate overall, people always ask me, what's the key to success in real estate? You know, how can you suggest that we make money? Well, number one is always location. You want to be in the right location. So we're really good and we're really picky at where we buy. We probably, most of the deals that we look at are not, we throw out from whether it's realtor sent us over or off market. Most of our stuff is off market. We're really good purchasers, auctions, off market, many different ways that we buy properties. But when you have that home in the right location, there's some key factors to having the best rental property. And that's not only renovations, high quality of renovations, making sure that you have nice kitchens, nice bathrooms, the functionality of the home, making sure the electrical, mechanical, plumbing is all intact. And we have multiple inspections throughout the process. So we have not only our project managers, our inspectors, but we also have the cities that inspect to give us the city's certificate of compliance. But we also have a third-party inspection, which we require everyone get prior to purchase, because this is a necessity. We need a third-party inspection done prior to purchase. But that's the renovation portion. Then you come down to the leasing and property management. Leasing, we place the right tenant in there, someone that is, no evictions, no criminal history, 3 times the amount of rent, previous landlord references, decent credit. They have 1.5 months down for the security deposit and 1 month down at the closing. That's us making the best decision possible to put the best tenant in there that is qualified to rent our home. So the property management is key. And our property managers, we've continually improved month by month, year by year on 2 things that we know clients want to see. Number one is communication, and they want to get their payment every month. Now, we have great property managers. Each property manager has an assistant, so they get back to you and they work with you. They answer your questions and they make sure you know how to use our portals and get in there and see your cash flow. So we are now what I call an A property management company. I really feel that our property managers are great. We have a weekly meeting. We have systems, policies, and procedures that we follow. So our property management is excellent. And we have a due date of the 5th of every month that the tenants are supposed to pay by. If they don't, there's a late payment. And sometimes I will tell you, I disclose this to everyone that works with us, that by the 5th of the month we've collected 60 to 70% of the rent. And then the other 30 to 40% comes in, week 2 and 3, and it trickle in. And what happens is you're just making a higher return. I mean, I hate to say it, but it is, it's something that happens. They're just paying, a late fee, which is making you more cash flow. So, we don't promote anyone to be late, but if they pay on day number 6 or 7, they're paying a 10% late fee on their rent. And that's things that happen. Actually, a guy called me the other day, and he called the office, and he said, hey, he said, things are going, good, but I have 5 properties, everything is paying. He said, but 2 of them didn't pay by the 5th. I told him, hey, that's actually a positive, and he's because they talk to our property managers and they're paying next week. So things like that happen. That's real estate. If someone can't, if you got to understand how to really, maximize the investment and understand that there's no perfect straight line, that there's never going to be, a hiccup or something that's going to happen. It is passive income, but there's things that happen, but we're here to handle those items.
Yep. All right. So we're gonna do the questions now. It's 47 past the hour, which means we have 13 minutes. So don't elaborate too much, because otherwise we'll run out of time. And some of these questions, and I say that with love, but some of these questions I can actually take also, just give you a little bit of a break. So the first question, and we've gotten a couple on this, so I just want to address it. Why is vacancy and maintenance not factored in? Okay, the reason, it says in the pro forma, you can see in the lower left corner, it says it's also recommended that buyers set aside reserves for potential vacancies and or maintenance costs, typically calculated between 3 to 6% of rents. So in other words, if you rented it for $1,000, that would be every month you set aside between $30 and $60, and just, don't spend it. Just keep it aside for, maintenance and vacancy. And, some people are more conservative. They want to put as much as 10% aside. I mean, that's a total position, individual decision.
Yeah, Ben, and I think that's something that, when we created this slide, that's something also someone wants to make the decision, like you just mentioned, might be something someone wants to put 10% in. The money's not going anywhere. It's going in your pocket, or, if something happens, you're prepared for it. But we have a 12-month maintenance warranty, which I want to point out, because our homes are newly renovated. So you shouldn't expect much there. That's why it's not there.
Yep.
I mean,
okay. And then market value, you're essentially selling these properties at pretty close to what their market value is, correct?
Yeah, or below.
Okay.
I mean, you have a lot of situations where you'll have someone with a $135,000 appraisal, and they're getting it for 120 or 115.
Yep. Understood. Yeah, I mean, the days of it's not 2012 anymore. The days of selling properties for far underneath what they're worth. I mean, you are selling them probably pretty close to market, as are most of our affiliates. But
yeah,
like you just said, you do occasionally get some nice equity built in, which is really nice.
Absolutely. You call us and you'll talk to us, and sometimes we have those deals, and and we'll show it to you when we do.
Okay. What is the age? Like, I don't expect you to know the exact date of this particular house we're looking at, but could you give a range of what the built date is on your houses?
Yeah, you're looking at about around the 50s, 50s, 60s. You even have some homes that sometimes are in the 40s, but mainly the 50s and 60s, I would say, on the majority of what we see. I don't know the exact age of this house. I didn't pull that data, but I could easily. But all homes come with a city certificate. So, that means that the home is stable, the structure is stable, and it's safe. So this is the stock of homes we have here in Detroit and Southeast Michigan.
Got it. All righty. So Francesco writes in, have there been previous renovations? Yes, Francesco, the way this works is this company buys the properties, rehabs them to Real Wealth Network standards. And when you, as the investor, buy the property, it has been completely renovated. So yes, there have been previous renovations. They've just completed them, and you are the brand new proud owner of the just renovated property. Another question from Francesco is sponsor affiliated to certain lenders, and are there loans, and are the loans fixed or variable? Okay, so the way it works within Real Wealth Network is all of our affiliates, yes, everyone has their special lender that they like. Because we have many members that like to buy in 2 or 3 different cities, we just thought it would be great if we could just have maybe a handful of lenders. I think we have 4 or 5, and most of our affiliates are okay with you using any of those 4 or 5. So like, I know that you use Graham, who's going to be at the event that I talked about in February, and he's a mortgage broker. And to answer your second question, Francesco, yes, it's up to you what type of loan you want. you can get a fixed or a variable. In terms of non-recourse, that is very specialized. You'll have to find a non-recourse lender, or we can help you with that. Usually those are only used if you're buying from an IRA. How many homes are you rehabbing per month, approximately?
So we're approximately rehabbing around 60 homes simultaneously, and they're all in different stages. So you have some that just started, some that are in the middle stages, some that are on the end stages, and sometimes that end stage actually takes a little bit longer because you have the city going in there, you have appraisers going in there, so it's funny that last 10% of the home sometimes is is almost the amount of time the 90% took. So we always have a lot of homes under construction. And, one thing about us that, talking to Tim and Nick and some of the other guys in the company, they said, Mike, make sure you point out that, some of the strengths of your company, which is our purchasing department. We are really great purchasers from auctions, sending out mass mail. We have 500 realtors and wholesalers that work directly with us on a regular basis that we talk to. So we always are looking at going through inventory and picking out the best homes. So we have inventory, but it goes quick.
Right. Yep. Okay. How often do tenants stay? It's like the longer the tenant stays, the better the cash flow and the better the rate of return. Turnover kills the investment. So
absolutely.
What is your average tenure of your tenant, if you know?
Shoot them from the hip, and knowing what the data tells me from history, approximately 3 years.
Now, I heard 60, but did you say 16 or 60 homes under renovation?
60.
Okay, that's what I thought. All right, that's why I was impressed. 16 would be that's impressive enough, but 60 is really impressive.
60, and we're trying to up that because we have so much demand.
Right. Okay. Now, what is and you might have to shoot from the hip again here, but what is your average turnaround cost to get a home rent ready once a tenant moves out?
So I'm gonna try to answer it as fast as possible because I want to get a lot of questions in here. So if you have $1,000 rental, you have a security deposit of $1,500, and you would have an average turnaround cost I see from the property management department of $2,500 to $3,000 at the most. But I would say roughly $2,500. But really, you're coming out of pocket with $1,000 because there's that security deposit.
Right. Okay. Gotcha. Now you mentioned this a little bit. I just want to ask this. You said that, one of your earlier slides said low tax. Now, are you talking property taxes in Michigan or in Detroit proper are relatively low compared to other areas, or were you referring to other taxes overall?
I was considering, both of them. We have, fairly, decent property taxes and low, state taxes too. So both.
Mm-hmm. Mm-hmm. Okay. Because like the poor Texas has, great investments, but they're known as having high property taxes, between 3% and 4% of purchase price every year.
Oh no,
so
yeah.
You're nowhere close to that. But you're probably not in Alabama that's like so low as to be practically off the charts, but you're somewhere in between those two extremes, right?
Yes, I would say we're not Alabama, we're not Texas, we're right in the middle.
Right. There you go. Okay. And this is impossible to answer quickly, but we've got like 3 questions on it. People overall say that Detroit really isn't all that landlord friendly, but some people say it is. So what is your opinion? You live there. You're in the business. How is it? Here's the stereotype: California, Illinois, landlord unfriendly; Alabama, Oklahoma, landlord friendly. Those are the kind of the true stereotypes. So where does Michigan rate?
Well, I would say with the way we run our company and our property management division and how we're on top of everything, we make it landlord friendly because our homes are quality homes and we know how to run the process. We know how to, time the tenant move out. and get it ready quick. And if you, let's say, in the unfortunate situation where there's an eviction, we know how to file the case, and we have a reputation where we have, people know, and that the cities know that we have quality. So it is landlord friendly. You could look at a state that you say is landlord friendly, and someone might say it's not. So I think it's all in the perception of the company and how they run their business. So I look at it like us. We have policies, processes, procedures, and great people. So I look at it like we are very landlord friendly.
Got it. Do you ever see multifamily, or are you like 95% single family?
Absolutely, we see multifamily, but we're very picky. We're never going to put someone in a situation where they're not going to do well. Like, people call us from multifamily, or they'll say, "Hey, we've seen this home on Zillow, or this apartment complex on Zillow." I tell them that's the bad area of Detroit. There's good and bad areas in every single city, and when people come on a tour, that's something that we like to show them. We like to show them, "Hey, here's where we buy, and here's where we don't buy," and that area where we don't buy is areas that are being revitalized, and 5 or 10 years from now will be great areas. And we welcome people to come on tours. We're going to do a big bus tour. I think it's going to be in April, I believe. So you guys could even come before, and you're always welcome. You guys will be our guests. We'll show you our office, show you the city and our homes.
Got it. Here's a really interesting question. The asker, Jason, says Cleveland, not that far away, a couple hours. Cleveland has great numbers on paper, but when you factor in the strange landlording fees the city imposes, the cash flow drops dramatically. Is Detroit similar? Now, let me address that really quickly. I know that, Cleveland, unlike Detroit, but Cleveland has a bunch of different little cities and hamlets everywhere, and they all have their own rules. But one of the things that they do is this point of sale system where they make anyway, it doesn't really affect a renovator, because you've renovated the homes. By the time the investor comes in, you've already done that. But addressing his question, are there a lot of strange landlording fees and hidden things that causes cash flow to go down?
The only thing that I can think of, and this is like almost irrelevant, is you have a city inspection in some cities like every 2 or 3 years, and you got to pay like $125 in certain cities or whatnot. But there's no other strange fees that I've ever seen, and I've done thousands. So, I mean,
got it.
No.
Okay, good. How long does it typically take to find, property 123 Main Street goes vacant? Tenant moves out February 28th. You go in, you make ready, and it's ready a week later, whatever it is. How long does it typically take to find, screen, and place a qualified new tenant?
Well, I'm going to tell you this. If we know a tenant's going to move out, we even know before they move out, we write a scope of work. So the day they move out, we're almost on it. Within 1 or 2 days, we're in there working. Once the home is almost ready, we list it for rent, saying, under renovation. So we get applications in. We get a lot of applications in. We pick the right one. So then the home's ready 2-3 weeks later. We have a tenant in there 30 days later.
Got it. Okay. All right. Well, that's nice.
Now I will tell you this, Ben. That's how it works, right? But you have your exceptions. You have your situation where we may have someone in there in 2 weeks, but then you may have your exception where you have someone in there in 5 weeks. So this is how it works in our typical, our 90%. But then you have your situation where it's even better, or sometimes there might be a holdup. The city might be shut down on Fridays, so their inspectors are backed up. So we have an extra week out before the inspector gets in. That's how it works.
Yep, I understand. All right. And typically, you did just say you encourage people to come out and visit, but a lot of times, if they're not able to for whatever reason, and they're trying to decide, they'll work with you guys and try to pick a house and look at all kinds of pictures, and then you of course get a buyer. You'll speak to your investment counselor. You want to get an independent third-party inspection. You'll get obviously an appraisal. The bank will order an appraisal, so you're not overpaying. You'll get an inspection. And they'll send you all kinds of pictures.
We'll go a step further too, and I just want to let you know, because we love people to come out. So we always encourage them, but we know everyone is very busy. They got a lot of things going on. So what we do with a lot of people sometimes is we actually do a FaceTime video of like we drive down the neighborhood. We show them the home. We actually walk in. So they kind of have like a virtual, tour of what they're buying. So it's kind of cool. So,
Right.
we go a little step further, and that really helps them out too, where they're like, wow, okay, this is cookie cutter neighborhoods, beautiful, clean neighborhoods. And, prior to them even, when they have a home under contract or whatever, we show them the process that way.
Got it. Typically, how often do you end up having to evict when tenant stops paying and you give them the saber rattling notices and whatnot? How often does it end up being an actual eviction? Do you have any percentages?
I would say overall, we have 7-day notices that go out. That's not an eviction. That's someone, we have a process, and I have to answer it this way. I'm sorry, it's not being long-winded. It's just I want to answer it clearly. So we have virtual assistants that work with us on the back end. They're assistants for our property managers, and they call everyone on the first of the month, and they send out a message, hey, rent due on the 5th. It's just natural. That's what we do. It's automated. And then we call people on the 5th. If someone doesn't pay on the 5th, we automatically send them out a 7-day notice. That's not an eviction. But then I would say overall in our entire portfolio, we probably start eviction on 3%, and then it dwindles down to really 1% is getting evicted.
Right. Yep. I hear you. That's good.
And then we work something out with them where they move out amicably and it's smooth. And if it does go through the whole eviction, you're looking at probably a $1,500 fee. But we try never to get it to go there. We actually let them know the consequences of it damages your credit. It's going to affect you in the future to buy a home. And that's why what we do is we help them. We refer them to credit repair. We send them articles on a monthly basis on, preparing to be a homeowner 5 or 10 years down the line. So we really show them that we're on their side. We're not the big bad, property management landlord. We're on your side, and we're trying to prepare you for success.
All right. What about Section 8? Do you ever deal with Section 8 or not?
I would say it would be less than 10% of the time, and that's they still got to go through the same qualifications. And sometimes we have an owner that says, no, we don't want Section 8. Or sometimes we have an owner that says, we do want Section 8. We talk to our owners. We make a relationship with them. We understand what they want for the short term and the long term. We're here to help them build wealth through real estate. So we actually, we know the best practices. But if someone is specific and they say, we don't want to do 1, 2, 3 because of this, we'll talk to them about it. Sometimes they change their mind. Sometimes they're set in what they want to do. And we could work either way, but I would say typically under 10% of the time.
Got it. Okay. Opportunity zones, and I don't want to get into this as a huge subject, but just briefly, obviously there are opportunity zones in Detroit.
Yes.
Are you aware of what those zones are, and are you buying in some of them or not?
Yeah. So we're doing a lot of digging in because really, it's something new this year, and it's really a learning process and something that you really want to master. So we're looking into it. We do buy in those. We're looking to buy in some of those areas right now. We're really not buying a lot in those areas, but we're looking to see if there could be special projects, maybe, an 8-unit apartment building or a 10-unit apartment building or, or housing there. And then we'll circle back around with you guys and see how we can turn it into something beneficial for the members.
Right. Okay. Yeah, the opportunity zones things are pretty exciting. And okay, final thing. I keep saying that, but this one's really going to be final. How long does it typically take? I know it's less than 1%, you said, or whatever, but how long does it take to do an eviction? Is it one of those states like California or Chicago where they, if it's a dead of winter, the city won't let you evict somebody, and there you are, and you've got a squatter for a whole season? Or is it not like that?
I would say opposite of California and Chicago. The process is a lot, faster. You have. This is how it goes. There's a 7-day notice that goes out, and basically the 7-day notice says get caught up, or we're going to start the eviction. Then if you talk to them and they come in and pay. We just throw out the paperwork. It doesn't cost anything. If they don't, and we want to go through the eviction process, we're talking to the owner, letting them know what's going on, start the eviction process. We got to get in front of the judge. So that could take 1 to 2 weeks to get in front of the judge. So now you're looking at 2 to 3 weeks, and then the judge will give them 30 days to get out. So maximum, you're looking at 60 days if you have to evict, but it usually doesn't go that far. We know how to work with them. We know how to make things smooth, but we know how to expedite the process.
Got it. Okay. Well, so we will close out, and what I'd just like to say to based on some of the questions that we were getting, they're all good questions, but it looked like some people had not had a strategy session with either myself or Aristotle or Joe. So the way Real Wealth Network works, just very, very briefly, is anybody can log in, anyone can join for free, watch these webinars and whatnot, but if you want to take it to the next level, which is actually speak to the gentleman we're talking to today or any of our other markets, you need to speak to us first so that we can kind of informally qualify you, make sure that you're ready to go and, mentally, physically, financially. I mean, we just have a conversation with you. And then we kind of help you narrow down what market might be right for you. And some people get on the phone and they know right off the bat, hey, I'm interested in market X, Y, and Z. Boom, boom, boom. Other people, it's more of a, gee, I don't know. Let's talk about the positives and negatives of single family versus multi versus hot markets, cold markets, appreciation markets, cash flow markets. So what you want to do is have a strategy session with one of us, and then we will put you in touch with these various affiliates after that. So that does it for today. I just want to kind of reiterate, we have our event coming up very soon. It's happening on February 9th, a Saturday. It's in Tampa, Florida, St. Petersburg, actually. And we're going to have Detroit will be there, as well as a bunch of other affiliates. So if you want to have a crash course in the middle of February, come down to the semi-tropics, or actually the full tropics, and then hang out for a couple days and turn it into a little mini vacation. It's our annual actually we do it every 6 months, our East Coast event, and you can just log in online and sign up there. So thanks, everybody. Sorry we ran a little bit over, but I think it was well worth the extra time. Hopefully we'll see you in a couple weeks. This webinar will be archived within the next 24 hours. We will archive it and put it on the site. Sometimes it takes a little longer than that, but very shortly it'll be on there so that you can watch it again and again and again if you want. And thank you so much. We're here with Cleveland next week. Appreciate it. Good job today.
Well, thank you, Ben, for having us on there. Thank you, everyone, for listening. And we look forward to helping you build your cash flow and building wealth for you for the future.
Absolutely. Thanks so much, everybody. Have a good one.